Good afternoon, traders and investors. Will back here with another one, coming to you with a Thursday market recap. Hopefully you guys had a great day in the markets today. And in today's action, guys, well, the most hated rally continues. This time, the SPY getting very close to its own all-time highs, almost breaching it, but not quite, off by a few points, and the GOOG pushing on to new all-time highs of its own. Now, this may leave several people questioning how this is actually possible. I will remind you, though, that the markets always have a long-term upward bias. You have to give the markets an immediate reason to sell off, and as of right now, there's just a lack of bearish catalysts in the markets. Not so much in terms of negative macro news. The inflation numbers, as of right now, are still tame. The jobs numbers overall are still good. Economic output as measured by GDP is still okay if you were to remove the impact, of course, of the imports resulting from the front running of tariffs. And as a result, guys, the markets are just looking forward to the next possible negative catalysts, but that may only come starting in Q3 when the impacts of tariffs are possibly going to be felt. That being said as well, we are going to jump into another earnings season coming in the next 2 weeks, starting off with the banks. So we will see how corporate profits are shaping up leading into the summer period of time. But as of right now, that's why I call it the most hated rally, because it seems as though in the background, there's a whole bunch of negative things happening. However, until it actually reflects in the data, the markets are not going to drop as a result of it. And Jerome Powell, the last few times he's spoken to us in the last 2 weeks, has been very clear on that as well. There are risks on the horizon, but so far they're just not materializing. So as of right now, guys, in today's video, we're going to tackle a few things together. Number one, we're going to be going over the number one Nike earnings, which came in after the close today. Curious to see, is Nike's turnaround story going according to plan, or is still more work on the table? We'll take a look at those earnings in a few short minutes. Thereafter, we will do our classic technical analysis rundown of all our major stock market sectors, see how the rotation is playing out, and thereafter go through our big tech names and see how the rotation between the big tech names is doing as well. Are there still some names that are worth the play, or is everything too high? And then to wrap it all off, we will take a look at the biggest gainers and losers of the week, spend about 5-10 minutes on that, and try to go through as many companies as possible. So it should be a fun video. Once again, guys, let's jump right into the action, shall we? So the SPY up 0.78%, the Qs up 0.94%, and contrary to yesterday, in which we were having a lack of market breadth, today, it actually came back, doing very well. Most of big tech up and to the right. Financials performing well too. Healthcare also up and to the right. And the bottom half of the market, the areas that were struggling a lot in yesterday's action, actually performing quite well today, all except for Walmart coming down on a little bit of a dip. If you take a look at the one-day relative, you can see that even better, to where most of everything was to the upside, led by basic materials, communication services, even energy catching a little bit of a bid after being a dog in the last 1 week and a half, as the peak tensions from the Middle East conflict have now largely been solved with that ceasefire. And then to the downside, we still have consumer defensives. Unfortunately, that was led down by a few of the biggest names in the sector, namely Walmart, Costco, Procter & Gamble, and Coca-Cola. So before we get into more technicals, guys, and do the momentum analysis and the fear and greed rotation analysis, etc., let us dive immediately into the Nike earnings and get that out of the way. So let's see it, right? So Nike coming out with earnings after the bell. The stock is currently down not even 1%. It's been oscillating all throughout the past roughly hour and a bit. As you can see, if I throw on the extended hours right here, pop, drop, now another drop and another pop. The conference call is currently underway. I'm filming this one at 5:15 p.m. So it's very possible that this one fluctuates as I'm speaking. I would expect most of the fluctuations to come from any tariff comments by the management team, right? That being said, before we dive into the numbers, guys, even though they did have a good quarter, beating by EPS by 6% and revenues by 3.44, the expectations were extremely low. And when I show you guys the numbers on a year-over-year comparison, they were absolutely terrible. But we were anticipating them to be terrible, as that was the guidance that we were provided as of last quarter. This most recent quarter was supposed to be the worst quarter for Nike before embarking on the recovery story. Let me just set some context before we dive into the numbers, so it's going to all make sense, right? What were the problems that Nike was facing? Why did the stock drop an astronomical amount over the last couple of years, now down 65% from the highs? Well, it was a product of a few things. A lot of people having a lot of free money during the pandemic, which brought for a lot of sales for the company. And you can see that reflected in their 2021 and 2022 numbers in terms of EPS, which did last through 2023 as well. But then people pulled back on spending. We know that consumer discretionary has been very weak, and you can see that clear taper off of revenue and EPS on the later stages of 2023 into 2024. But the company also had some execution problems and they had a CEO transition as a result. Nike had become a company that was largely focused too much on online sales and reiterations of previous style elements. However, not so much being an innovative company anymore, losing some market share to other competitors such as On Running and such as Decker's Outdoor Brands and many other competitors, Asics, Hoka's, just to name a couple brands within those previous companies, right? They were losing market share. That was number one. And number two, they had kind of left their wholesale partners out to dry. The previous CEO wanted to put more emphasis on online to kind of save on margins, but in the process, they lost a ton of free marketing from having their products displayed in the wholesale segments, such as companies such as Foot Locker. So a whole bunch of execution risk, which led to mismanagement of inventories, buildup of inventories, dwindling of EPS, dwindling of free cash flow, dwindling of revenues. And here we are now. The stock's still down 65%. So are they possibly on the start of a recovery story curve? Let's have a look. So let's dive into the numbers first. We should do it, right? So they beat on a number of metrics here, guys, but don't focus on the beats, okay? They beat on almost everything except for China. I want you guys to focus. The beating on consensus, right? But the consensus numbers were already sandbagged very low. Focus on the prior year. It's a disaster, right? But this is possibly the culmination of the disaster, and maybe we might just be looking to have some upside from here. Revenues, prior year, right? 12% to the downside, missing across every single segment. China was the largest decline year over year, missing on footwear by 13% from last year. Apparel down 9.7% from last year. Whether it's wholesale or direct to consumer, everything was down, and even margins as well took a hit. Prior year, 44.7 gross margins, now sitting at 40.3. And unfortunately, inventories, a big issue for Nike. They were sitting on 7.5 billion of inventory last year, and they are still sitting on 7.5 billion of inventory this year as well. Unfortunately, they're not able to liquidate old styles fast enough, and it is definitely weighing on their balance sheet because that's a ton of revenue, right, that they could be realizing if they were able to liquidate it. Now, Nike's going to have to focus on innovation, and that is the plan of the new CEO, to focus right now on innovation for its products, but also to rekindle what once made Nike great. We remember Nike as a company with very large sponsorship deals with prominent athletes across multiple different disciplines. And the new CEO is trying to rekindle that aspect of the business as well, move away from only styling and go more in towards what actually made Nike great, a footwear, a running innovator for technology in their shoes, etc., etc. Now let's move on to the article right here. Nike sales dropped 12% as we saw, but the sneaker giant says the worst of its slump is now behind it. It expects sales and profits decline to moderate ahead after the sneaker giant took its biggest financial hit yet from its turnaround plan during its fiscal fourth quarter. Moving on, last quarter, Nike warned that its fiscal fourth quarter, this one that it just had, would be the low point of its turnaround, but in the month since, conditions worsened, mainly because of tariffs, leaving investors wondering if more pain was still to come. Nike Finance Chief Matt Friend confirmed that the fiscal fourth quarter will see the largest financial impact from its turnaround, and headwinds are expected to moderate moving forward. They spent a bunch of money on this turnaround story, realized a bunch of expenses, and now is possibly the time that they can see a brighter horizon. Here's what he had to say. I'm confident in our ability to navigate through this current dynamic and uncertain environment by focusing on what we can control. Controlling costs, once again, trying to liquidate inventories and trying to get back to what made the brand, so great in the past. Moving on in, you can see the Nike revenue by category, and it was not good. Converse revenue is the light purple squares. You can see here that Converse as a brand has been struggling for the past 2 years and now is no different. That was on the decline. Equipment revenue as well, not really expanding, roughly flat year over year and quarter over quarter. Apparel revenue too, that has been dwindling down and to the right. And footwear revenue, as you can see, after reaching peaks of $8.5 billion per quarter, it is now down to 7.2, a fraction, well, not a fraction, but shy of what it once was, to the tune of about 85% of its prior revenue. So all of that being said, guys, they are still doing some things that do favor shareholders. One of the main things is that they're buying back an absolute ton of shares. They had authorized a share buyback plan of 18 billion. Over the course of this past year, they have done $3 billion of buybacks altogether. They still have roughly 6.5 billion of buybacks remaining, which is 6.5% of the float. That's definitely going to help the share price in the medium to long run as well. And all things considered, you can see the impact of those share buybacks here since that buyback plan was authorized, really starting to drop the shares. And as the share price is very low, that is also making a nice little dent here in shares outstanding. So all those things considered, guys, Nike is currently still embarking on its turnaround story. I'll be curious to listen to the earnings call after this, but we can clearly see, right, as we embark into the next calendar year for Nike, they just ended Q4. I know they run an awkward business cycle, but it is what it is. We should be seeing a return to growth in EPS over the next 2 to 3 years. And we should also be seeing a return to revenue growth. It's not going to be a very fast revenue growth, as even by 2027, it's stated that the revenues will not exceed possibly even so much the revenues of 2023, but at least they are on the right path. They've recognized a lot of the problems that they've had. They've switched up the CEO. Most of the damage is supposedly still behind us. So now moving forward, we might be able to possibly get some upside in the stock price, but it may not be as fast as people are anticipating. Is Nike a buy down here for its recovery story at 60 bucks at some of the lowest points we've seen since literally 2016, 2015, and 2017? Well, full disclaimer, guys, I do think so. It is worth a recovery story bid. It is still one of the most recognizable companies on the entire planet, and I would not count them down and out just yet. At 62 bucks right now, they're running a forward price to earnings of 33.5, which gives them a forward PEG ratio of 1.86. Now, it's not very good because the earnings are kind of bottoming, flatlining, and then increasing thereafter. One metric that we can use, a more value-oriented metric, actually two as a matter of fact, is price to sales. Nike had a price to sales of 2, is one of the cheapest that we found in years, guys, in over 5-6 years. And the free cash flow yield at about 6% is quite good, all things considered. Usually you do not find Nike at a 6% free cash flow yield, which is just their annualized free cash flow divided by their market cap right now. So the whole time that their market cap remains low, that free cash flow yield should still be quite high. That being said, they do not have a lot of debt on the balance sheet. At least their balance sheet is looking quite good. A decent amount of free cash flow as well in the most recent few quarters, even though it has been coming down over the past 3-4 quarters in relation to their boom years, which was 22 and 23. And you can see that they still have a lot of cash on the balance sheet as well. In the most recent quarter that they just reported today, we can scroll up in this document right here, and it's standing at about 9.2 billion. So their balance sheet is okay, but it's all about the recovery story. I am a fan of participating in the recovery story, guys. Right? Who knows? We can oscillate between 60 and 50 bucks if things really get bad, if the tariff ramp up starts again, and they're just not able to piece together the different parts of the recovery story of their business over the next quarter. Maybe it may take them a quarter or two. However, if the timeline for the Nike recovery story, if you're willing to give this stock possibly between 2 to 5 years, I do think there is a possible reward to be had as a shareholder, as now we're really into some historical prices. And now, like I said, it is a company that is not going anywhere. Nike will still be around probably forever. It is still one of the most recognizable brands, despite facing ongoing competition from this stock right here, On Holdings, and another companies such as Decker's Outdoor Brands. But still, I do like Nike for recovery play. If I do play it, it's not going to be a very large position, but I would not mind playing it overall. It's just not something that I would really go all in on, so to speak. So that is everything I had for you guys for the Nike earnings. Hopefully you enjoyed that. Now let's jump into some charts, shall we? And we're going to start off with the SPY right here. So the SPY up about 0.8%, as I was saying, very close to the all-time highs. Before we do the technical charts, I'll just remind you where we stand. Fear and greed sits at a 62. Definitely not extreme greed, but we are curling up here a little bit. I'll remind you as well that we're going into the month of July very shortly, which is seasonally one of the best periods of time for the market. And as of the last Friday session from this data, we can clearly see in terms of the smart money versus dumb money, which is just pretty much retail versus institutions overall, we can clearly see that retail got a little bit spooked from the Iran-Israel conflict, but institutions were definitely coming off of a low and do have a ton of buying power remaining to keep pushing up these markets higher, which is why breadth has remained fairly positive. Talking about that breadth, we can look at a few of our indicators indicators just to know where the strength is coming from. Percentage of stocks above their 20-day EMAs is still now starting to curl up back towards the highs, which is good for some short-term momentum. Still not at overbought levels, which would be an 80 read, 80% of all stocks. Percentage of stocks above their 50-day moving average also shows that this is the institutional control chart, guys. As long as there's more than 50% of all stocks above their 50-day EMA, it does show that institutions are fairly bullish on this market and are pushing us a little bit higher. Where we can also see some expansion is in the 200-day EMA category. Only 46% of all stocks are above their 200 EMA. So if you're looking at the SPY right now and thinking that there is still no good deals left in the market, everything is hitting all-time highs, it's not the case. As a matter of fact, less than half of all companies in the market right now, or at least measured by this indicator, are above their 200-day EMA. There are great deals all over the place, provided you understand where to look. However, one thing that I do not recommend, even though none of this is financial advice, I guess I'll recommend it to myself, is try not to do something that the S&P 500 doesn't do. Do you notice all the biggest weights of the S&P 500 are the biggest winners of the S&P 500? It's that for a reason, right? Whenever stocks rally and stuff like that in the S&P, does the S&P add more to them to keep the weights the same? Or rather, do they stop adding to them and add to new names? Essentially, what I'm trying to say here is, there's one thing, if you are underperforming the benchmarks, it's probably because you're doing one thing that the SPY never does. The SPY never trims from its winners to add to some of the smaller weight losers that have been lagging behind. New money can possibly be added to some lagging plays, but one thing that I never personally do myself, I never cut out of my biggest winners to add to some losers. Any contributions to my long-term portfolios, meaning new money, can be allocated to some names being left behind. But one thing you will never see me do is sell some of my Microsoft and buy some Nike, sell some of my Amazon and buy some Nike, or things of that nature, right? So if you're underperforming the benchmarks on a regular basis, try not to fall into that trap. It's a very common misconception and a mistake that a lot of investors make, is to trim or cut from their biggest winners, although those positions should be locked into your long-term portfolios for the next 5, 10, 15, 20 years. If you have that long of a time horizon, why would you be selling any shares? They're some of the best companies on the planet with some of the most dominant moats, right? We do not sell those to dive into some companies that are currently in recovery story statuses or that are facing certain problems. As a matter of fact, when companies have too many problems in the S&P makes them such a very small weight, removes from them, adds to the winners, and or they cut them out of the entire index. So don't do something that the managers of the S&P 500 are not doing, and you probably will have the best chances of being in line or outperforming the indexes if you are individually picking stocks. That being said, moving into the technical aspects of the chart, clear breakout out of the resistance range. I cannot turn this box red until we close this candle on the weekly time frame, because if we give it back tomorrow with some big piece of news, then it'll still be a rejection on the weekly time frame of resistance, right? That being said, a lot of space. Anything above 592 would just be looking for a daily higher low, possibly back testing this area of consolidation. The Iran-Israel conflict news, back test for possibly a little bit of rally. That's if we don't just continue into new all-time highs tomorrow, put in a bit more space, and then truly get the breakout, clear breakout, retest and run. That could be a very juicy little swing trade. If I do take that one myself, I'll let you guys know. But suffice to say, who is in control of these markets? We can clearly see the weekly bulls are clearly in control of the timeframes right now. The monthly candle close is about to be had in just a few short trading days. And as I said, the month of July is traditionally very bullish, and you also have institutional support. So right now, even though it appears as though we should be selling into the all-time highs, I'm still remaining fairly confident on the short-term momentum of this market. Onto the QQQs right now. Same analysis, clear breakout of the all-time highs. We had equal consolidation lows into, well, we were struggling into resistance. Now we have clearly escaped the bounds of resistance and are on to blue sky breakout territory. Any pullback right now, anything above 523, going to be looking for a higher low. For possible further trend continuation, this could be a very nice continuation setup, guys. If you start back testing this level right here, 530s, low 530s, stop loss would go below the resistance, or previous resistance, which is now support. And then expansion territory, you would have to be looking at the round numbers, 550, 560, all things considered. It could be a very juicy swing trade. And always remember who is in control. That is why we have an upward bias. It is the long-term QQQ bulls, at least the medium-term ones from this weekly time frame, right? I mean, geez. At this point, with the lows right there, 523 is your new weekly higher low, so tons of space for the bulls as well. Moving on to the XLF financials right now. Financials also trying to peak above their resistance highs. 51.50 all the way down to 50.75 is that resistance range. There is still a little bit of a gap to be filled. So if in the event we come back and fill it, we can possibly use all of this consolidation range to establish some form of a backtest of support and possibly get a little bit of a rally into earnings. Financials earnings, yes, coming up in 2 weeks worth of time. At this point, the bulls have a lot of space, anything above 49.90, higher low, possibly looking for the expansion. Financials have been looking good. Close a weekly candle like this after sideways accumulation on the weekly. This has always been a bull flag looking for possible expansion. So financials looking pretty good. My favorite plays, I've been saying it now for a few weeks in a row. Berkshire down here in a support 43 down to 470. Visa also, and MasterCard also looking very nice for some plays that are slightly lagging behind not only the respective index, but have come down a lot in the most recent few weeks, which could offer some decent swing trade opportunities, but also some very decent long-term portfolio buys. Moving into XLV Healthcare right now, up 0.24%. They were up a lot more before consolidating into the end of the day. The clearest time frame for me on healthcare is what the bulls are trying to do on the weekly time frame. Downtrend, we got a nice 75% retracement bounce. The bulls are trying to set the higher lows and go for the weekly uptrend. That will only be confirmed when we crack these highs 137. The weekly MACD is appearing to want to move into the positive territory. So we will have to line up a couple more green days, get this daily uptrend back in motion as we lost the lows, flush of the lows. The bulls have to do all the work again. But if you focus on the weekly timeframes and the fact that we are really into the confines of support from 2021 through 2023, it should be fairly obvious that since the XLV has been lagging behind, we're into support, we're into some long-term EMAs such as the 50 on the monthly. It is a fairly decent buying opportunity in my opinion, and I do have some leap call contracts on this one, but it's moving, it moves slow. Healthcare is not Palantir, right? Moving on to SMH right now. SMH, brand new highs, but not new all-time highs. 284 would be a break of the all-time highs there. Beautiful expansion right now. We were talking about, right? Back testing support, which was 260 down to 250, and now looking for the expansion leg. If we pull back from here, look for a higher low, anything above 257. Higher low for possible further trend continuation. So the short-term bulls are in full control. Yes, we are slightly overbought, but if you take a look on the weekly timeframes here, not quite overbought just yet. So although it's been crazy, it can push a little bit higher as well. Beautiful weekly uptrend. And of course, if we lose this and come back into support, you guys know the drill, right? This would be a beautiful weekly backtest of prior range of resistance, which is now support, offering some new potential long opportunities. My favorite one that's been left behind, I've been very vocal about this one, ASML. ASML is one of the top tier companies with one of the widest moats and largest competitive advantages in the entire semiconductor landscape. And I do believe that one could be next up for some share appreciation, as it still remains undervalued in my humble opinion. Moving on to the Russell right now, lastly, the Russell up 1.62%. Not looking too bad. Small caps and mid caps definitely catching a bit over the course of this week. The daily uptrend is still in the bulls' favor right now, and you're looking for a break of the resistance high 217. If you can get that, we can possibly find a situation where we have the good old breakout, retest on the back test, stop goes below the low, entry is in the midpoint of the support range, and you're targeting the highs, right? So you guys know how I swing trade. I'll do it once per video all the time. I used to do a lot more of this. It's all about inter-time frame analysis. You get the daily expansion. If you see consolidation on the daily would mean an hourly downtrend. It would look something like this, right? Expansion, loss of the hourly uptrend, hourly downtrend into here. When you see the bulls get it back, the entry goes there. The stop loss goes below your daily low, which would be all the way down there. And then you're targeting expansion of the higher level. So as long as you understand inter-time frame analysis, as I've been showing, right, you should be doing pretty well with these swing trade ideas. If not, you just got to practice it and watch a couple more of my videos, I assume, right? Now, that's pretty much it for the Russell, but the Russell is looking good. The weekly bulls are looking for the expansion, similarly to pretty much the SPY, the QQQs, and a lot of other growth names out there. We will skip over actually, you know what? No, the VIX down to about 16 level. Still no clear move down into the lower parts of the range here. 14 on a 13 would show really an excessively greedy market. And of course, a pop back in here would only be a result of fears in the market, which could come from a break of the ceasefire, which could come from tariff inflation fears, from stuff like that, right? But until we have another fear catalyst in the market, suffice to say, we might not get a pop anytime soon. Moving on to the dollar, this dollar still weak, setting new lows, guys, right? I've left this arrow on the chart ever since we started this back test, and the prophecy has now been fulfilled. So the dollar still remaining really, really weak, all things considered, continuously hitting right now 3-year new lows almost every single day of the last 4 days. or rather, 3 days essentially, right? So we will see when the pain stops, but I'll remind you, when it stops, it's going to be a very long road to recovery. This is good if you're international and looking to buy dollars, to buy bonds, and to buy equities, of course, but maybe not so good for the US purchasing power against other currencies from US people who hold dollars, of course. Moving into the yields right now, this is what you want to see on the yields, guys. Clear breakdown in the yields right now. And this is because the Federal Reserve has relaxed the requirements for the liquidity ratios that the banks need to maintain, freeing up billions and billions of dollars so that those banks can then, indirectly prop up the bond market overall. At least that was the analysis that was given by several Federal Reserve members in the most recent few days. The news hasn't been really talked about, but that has been one of the main catalysts that yields have been coming down. Beautiful daily downtrend, finally getting some momentum to the downside here. You really want to see a break of 4.2 to the downside on the 10. Give me the weekly downtrend. That would confirm that, okay, the monthly lower highs are set, and maybe looking for a monthly move lower into the lower 4% range on the 10. And the 20-year yield, similar analysis, right? We are looking for a break right now of 4.7. Give me a break of 4.7, guys. Engulfing move on the weekly would just go to show that maybe a lot of the monthly damage is out of the way, and we might just be looking to push a little bit lower, which is why I've been saying now for the past roughly 2 months that buying TLT in this area can be a very profitable endeavor, but that you might need to be a little bit patient. Nice little upswing happening right now, but we will see, guys. This one is probably going to take months and months and months if you want to see us get back into the, mid $90 to $100 range. So keep a long-term time horizon for those bets, but it is a still fairly good bet in my humble opinion. Moving on to gold right now. So gold, not too bad today, down about 0.14%, still trying to come in to our area of support. Let me just broaden this chart out so you guys understand what I mean here. Beautiful line of defense, 33.12 down to about 32.59. The bulls are still using it as of right now. Although we have lost a lot of momentum with this engulfing move to the downside, the bulls are really looking to just consolidate on the weekly, right? We had a nice leg of consolidation right here into the 12 EMA. Nice little try from the bulls trying to push, trying to set the higher lows and trying to run right now. So any trades right now on gold, the stop loss would have to be clearly below the 32.50 level, because that would really invalidate the support overall and might lead to a little bit more consolidation if that does happen, or worst case scenario for the bulls, set a downtrend, right? But a fairly decent bet, in my opinion, for some gold longs at this level. It doesn't mean it's going to work out. It just means that the technical setup is not looking too bad, all things considered. Moving on to Bitcoin right now. Bitcoin down 0.29% on the day, but we know the bulls made some quick work of getting back through this support range. From 105.5 down to 101.5 is the support range. Daily downtrend. We got a nice engulfing move. Any reversal patterns right here, just going to be looking for a new daily higher low, anything above 98.5, of course. New daily higher low, maybe get some momentum down here and go for the leg, trying to attack the all-time highs around 110, 112. Bitcoin not looking too bad. The weekly time frame, in my opinion, holds all the keys. Beautiful weekly uptrend. Bull flag. This is a sideways bull flag, guys. Huge move like this. Consolidation above mostly the support range after claiming it. Could just be looking for another leg of expansion. July is usually a seasonally bullish period for the SPY, but also a seasonally bullish period for Bitcoin too. So we'll see if it does respect that criteria this time around as well. With all that out of the way, now let's dive into our big tech name, shall we? And we're going to start it off with good old Apple. So Apple right now today down 0.28%. This chart has been really sideways for what? The past roughly 2 months of time at this point. The Apple is definitely significantly lagging behind the S&P, which could make it a very nice catch-up play to the markets. We can't forget that Apple is Apple at the end of the day. It's a very large weight in the SPY, and it will only be down for so long with the indexes continuously pushing towards new all-time highs. That being said, I do enjoy playing support ranges overall. The support range below us, 196 down to 187. Any longs here would be invalidated by a break of 194. And then the take profit area, of course, is into resistance 222 up to 211. Apple's not my favorite company for a fundamental purchase right now as to adding long-term shares to the portfolio. Their growth rate has really fallen a lot, and the valuation even up here is quite pricey for what their growth rates are expected to be in the next 2 years worth of time. But a swing trade could definitely be largely possible, and I do like the risk to reward profile. Moving into AMD right now, AMD up 0.20% Of course, again today, into the resistance range right now, 145 up to 155 is going to be that 10-point range that AMD bulls will have to contend with next. Very, very clear daily uptrend. Nothing bad to say here at all. This is one big daily leg higher on any consolidation. I'll remind you what's the case. Anything above 115, looking for a possible retest of the support range below, which is 132 down to about 120. This could be a very nice re-entry opportunity for AMD if it does allow. And even if the bulls lose the daily uptrend, I'll remind you that'll just be consolidation on the higher time frame. Gorgeous weekly leg of expansion right now. We'll just be looking for a weekly higher low for possible further trend continuation. Now, buying AMD up here, guys, you are definitely late, but you are not buying it at an expensive valuation, in my humble opinion. In around the 140 range, you'd be looking at slightly above a 30 forward price to earnings. But in terms of the PEG ratio, they're growing EPS at a fantastic clip for the next few years. So it's actually not as expensive as you may think, right? Looking at the EPS ramp growth rate right there and the revenue growth rate looking quite strong for the next 2-3 years. This is still one of my favorite swing trades, but a long duration swing trade for the next 2-3 years as they expand their data center offerings. Onto Amazon right now. Amazon up 2.42%, once again, trying its hand at the resistance range above. So that resistance range, I'll remind you, is going to be this level right here, 217 up to 227. We will see, can the bulls actually make their way into it? We know that we were in daily downtrend mode, which was just looking for a weekly higher low. And if you crack these highs and make your way into the range, that would officially be your weekly higher low being set. And the bulls never lost control of this chart, which is what I was always saying, guys. All these pullbacks were fantastic opportunities to add to Amazon shares for long-term portfolios or to play the wheel into support, because if we would have came down into here, there's a lot of bulls sitting there. Would have been very nice to farm some premium, which we did, of course, on the channel many times, and many options videos in the last 2 weeks featured Amazon as well. So we'll see if they actually have it in them to break through that range coming up in the next few days. Overall, Amazon 2 in around the mid 200s or low 200s rather is not that bad of a proposition considering their fantastic EPS growth rates and their ever expanding margins and multiple lines of businesses that are just cranking out that revenue into the future. Moving on to Google right now. Google still another one of my favorite bets, guys, right? Amazon, I mean, SPY's at the all-time highs. Amazon's not close. Amazon still has a lot of room, in my opinion. And Google, the same thing. So there are some plays. If you watch these videos regularly, guys, there are a number of plays that even though the indexes are clipping into highs, a lot of these plays have not been performing in line with those indexes. So you can find high-quality companies with very solid fundamentals that are slightly trailing behind the performance of some of their other sector peers, right? Why chase Microsoft, Meta, Netflix at their all-time highs when you have other companies somewhat equally as solid in terms of just their nature in the markets, right, that are still trading at relatively low valuations? Moving on to Google, that being said, daily downtrend, that was the case. Now we have a nice bounce by the bulls. Where did the bounce come from? 170 down to 160 was the support range that we were keeping a very close eye on. I was very vocal about possibly taking some swing trades into the lows of that support, and apparently that was a very decent proposition. I also loaded up some leap call options down here. So far they're doing very well. I mean, cross the fingers, knock on wood, but we did pick the almost absolute bottom of that trade on Monday. So far so good, looking not too bad. And this daily downtrend was simply weekly consolidation, as I was showing, right? Just looking for the weekly higher low for possible continuation into the resistance highs, 185 up to 190. In around the $170 range, Google is still one of the cheapest tech stocks in the entire market. Of course, if you can handle the risk that constantly gets thrown at it, tons of lawsuits, tons of allegations that they're losing search business to the LLM chatbots, of course, but I still think, all things considered, guys, that the reward can possibly outweigh the risk in this situation. Moving on to Meta right now. Meta up 2.5%, making its way now to the all-time highs. 735 to 737 is the last line of defense for the Bears. We'll see if they can actually stop the bulls with all this momentum. Looking very good, sideways range of accumulation. It didn't last for too long, and they really weren't consolidating anywhere, right? There's kind of nothing here for them to kind of fall back on. I guess there was these guys, but I mean, they're not that strong. Not as strong as a level like this, right? All things considered, Meta is looking very good. Any move lower, going to be looking for higher low, anything above 678. Higher low for possible further trend continuation. I mean, just go stair-step pattern, yeah? 704 is prior resistance, something like this. The 12 EMA is going to curl up. Maybe that's where the bulls find a bit more support. And even if you unwind this entire move and go daily downtrend, who's in control here of the larger term timeframes, right? It is still your weekly bulls looking very good for some weekly expansion. And we are targeting the new all-time highs in the near-term future as well at 726 where it stands right now. Meta is slightly under a 30 price to earnings for the end of 2025. Still somewhat in the mid-20s for 2026 though. Above a 2-peg, free cash yield is decent, but the company is growing very well. I wouldn't say Meta's cheap, but I also really wouldn't call it that expensive right now. Moving on to Microsoft. Microsoft, guys, every single day, man, every single day pushing higher ever since their earnings. But we knew that was the case, right? I've been playing Microsoft stock a lot in the lower end of the range. Consolidation for a year. I was saying, guys, Microsoft does this sometimes in its history where it just consolidate, does nothing. But here's the focus. When you see something consolidating like that, get a sense of whether or not it's improving its fundamentals, right? When you see a stock consolidating for a year, but the EPS is still ramping, the revenue is still ramping, free cash flows are still good, and they are still doing a great job at retaining and even expanding net margins, guys, that is a cue to possibly be accumulating the same thing as the market is doing. If the market's accumulating, you should be accumulating as well. When you get a drop down here, that was definitely the buy signal for everything right now. That being said, at the current price, very tough for me to add any Microsoft shares, but I'm not selling any. The bulls remain in full control, guys, right? Daily overbought conditions right now. Next stop is 500 psychological. We'll see. And even if we unwind, just watch for the daily downtrend, right? Daily downtrend just means weekly consolidation, and the next big area of support would be 460 down to 446. Moving on to Netflix right now, another company that just prints new highs. Daily uptrend is very, very noteworthy right now. Any move lower, anything above pretty much this guy right here, 1200, just looking for a new higher low for possible further trend continuation. And even if you unwind this entire move with a daily downtrend, just understand what you're looking for here. Just a little bit of weekly consolidation could be in order. Maybe targeting the 1150 down 1100 area, which would be the 12 EMA and confluence of the last line of air, the last area that Netflix really consolidated. I mean, there's two, right? But they're not very meaningful. This is one, your first line of defense, 1200, and then 1100. The 1100 range would be a better opportunity to possibly pick up some swing trades, in my opinion. As right now, I mean, we redid the analysis just 2 weeks ago at 1200. It was expensive. So you can imagine at 1300, it's going to be a lot more expensive than that. Probably coming closer to the 50 forward price to earnings, which is where I kind of draw the line even for Netflix. Moving on into NVIDIA. So NVIDIA up 0.46% today. New all-time high again for NVIDIA, making quick work of the resistance range that we just broke through. That was 145 up to about 150. I will not close this box green until we close this weekly candle, but all things considered, with 1 day of trading remaining, it still does look very attractive right now. Any swing trades in the future would just be looking for a new daily higher low. Anything above 142, looking for a higher low, but keep in mind, this is the infamous breakout, retest, and possibly run. So pay attention to the lower time frames. As I was saying, when you lose the hourly time frames here, guys, let me just tweet it on a regular trading. You lose the hourly time frame, that's daily consolidation. Eventually, when the bulls get it back, especially if they line it up into support, let's say it goes down, hourly downtrend, then you get the hourly uptrend, easy. Break of the hourly uptrend is the long, and then your higher low is going to be the stop loss territory, and then you'd be targeting the round psychological numbers, 160, 170, etc. So that's the type of trade style that I'd be looking for an NVIDIA backtest right now. That being said, the weekly bulls are in absolute full control. Look at this move. This is one single move, stair step pattern higher, anything above 95.50. Can you imagine? Would just be looking for a weekly higher low. So even if we get some weekly consolidation, it's not that bad. And we did the valuation at 140. It also was not terrible, trading in around the mid 30s for forward price to earnings right now, about a 1.5 peg. We did it at 140, but now I'm encompassing for 155, and a forward price to sales, which is a little bit rich, but then again, they are the leader in the sector, all things considered. NVIDIA, no longer potentially a buy for me up here in terms of long-term shares, even though you can have some upside, of course, but any swing trades, I might be interested if we backtest the previous all-time high range. Moving on to Tesla right now. Tesla down about 0.54%. Unfortunately, Tesla doing a whole bunch of nothing, coming back into its range of consolidation after getting rejected at resistance 360 down to 341. Short-term price action remains somewhat unclear. Even on the weekly timeframes here, guys, they had a ton of momentum coming into the highs. Unwind with the Elon and Trump drama, push higher with the robo-taxi news, and now unfortunately there's been a little bit of drama surrounding their robo-taxi rollouts, cars stopping in the middle of an intersection, cars not turning in an intersection, and stuff of that nature, right? I'm not saying it was a bad rollout, it just wasn't picture perfect in terms of rolling out. A lot of other allegations of cars breaking the speed limit, etc., etc. So the regulatory bodies bodies will possibly be involved, and as a result, you've just lost your momentum. All I can see here is we're consolidating between a range. Any long opportunities might be possible down here in the lower bound of support. 300 down to about 260 is that line of defense for the bulls. Moving on to Palantir right now. Palantir up 0.94% overall. Not too bad. The bulls in full control of this one. Daily uptrend, looking for a higher low. Anything right now above 136, looking for the higher low for possible trend continuation. Next stop, 150. If you unwind daily downtrend, quite simply, who's in control here? It's definitely the weekly bulls. Beautiful weekly uptrend. You'd just be looking for a higher low. Next line of defense support is 125 down to 119. That is the weekly higher low as well. So pay special attention. If you see some dips on Palantir, even I might consider taking a swing trade if we come all the way back down there. Moving on to SOFI right now. SOFI, look at this move on SOFI. Very, very pretty move. 4.29% to the upside, clearing the resistance range, coming into some of the highs that we had to start off the year in Jan and Feb. That being said, guys, SOFI longs from here. I mean, fundamentally speaking, if you have a 3 to 5 year time horizon, okay, you're not getting the best deals as possibly someone like me was getting back here when I was adding to my positions on SOFI, but still, objectively speaking, not bad. We did it at 15. It was about a 57 forward price to earnings, which seems expensive, but they are growing EPS at a fantastic clip. The PEG ratio is good, right? When we divide this by this, and the price to sales is also not too bad. So although you're not getting SOFI at the cheapest portion, I wouldn't say that it's egregiously expensive either, in around the $17 mark. That being said, clear technical breakout right here. Daily bulls are in full control. Any move lower, going to be looking for a back test of this whole range. If we can close this weekly candle like this whole area becomes a support range, and I would be interested, guys, for selling some short puts. Come down back into here. I'll try to sell some puts at the lower end of the range, and maybe even some swing trades with some call options. But what I will not do is just blindly take the breakout trade right here, because at this stage in time, it's a little bit late. I was telling you guys that down here was a great opportunity to go for it, and now you're actually into the take profit zone. So a lot of you guys that had those swing trades are now probably out with some decent profits. So congratulations. Moving on to Uber now before last. Uber up 2.44% as there was some news coming out. They were possibly looking to acquire the American arm of Pony AI, the Chinese autonomous vehicle company, of course. So we know that they also have a partnership with them in the Middle East. So that was some of the news that took Uber a little bit higher into the end of the day. But new all-time highs on Uber today, 94. Next stop, of course, is going to be the $100 target. And I mean, this is very, very clean, right? The bulls going for the engulfing move. Still have to reset the daily uptrend eventually. Any back tests down here of 88, which are probably, previous slight areas of price action coupled with the EMAs could be a logical place for a back test and maybe a run. That is if we don't just run into $100 right away. The weekly time frame was the cleanest setup that I've shown on the channel for a very long time, guys. This was a bull flag, right? Coming directly into the exact range that it took a while to break out from. The breakout, the retest, there was a few weeks to position right here, and now you get the follow through. You're into the take profit territory. Take profit number 1 is at the previous highs, and take profit number 2 is your round $100 mark. So congratulations to everybody who was able to make some money on that Uber swing trade. So far, so good, and all things considered at around $93 right now. Uber is not terribly expensive, but of course, it's no longer exceptionally cheap either. I'll redo the valuation for you guys, but right now it's currently sitting in the mid 35 range for forward price to earnings. The PEG is not terrible. The free cash flow yield is also pretty good, but it's just not the same prices as when we were building our long-term positions on the channel back here in the $70 range, where I was saying it was pretty much a screaming buy. And now moving into TSM right now. So TSM up 0.57%, very close to its own all-time highs. 226 is going to be the mark to break. Almost did it today. And the bulls are just in complete control of a lot of these semiconductor charts. Semiconductors have been one of your lead bulls, and TSM has been one of the lead bulls of its own respective sector. That being said, coming out of support right now, 212 down to 205 is that range. In the event you get any back tests, this is the classic breakout retest, right? So short-term timeframes, I've done it a few times on the video today. So just go through that time frame analysis, right? Get a back test, stop loss goes below there. If you're looking for the swing trade for the expansion levels, round numbers, since we're blue sky breakout right now, 230, 240, etc. The weekly bulls are looking fantastic. Never lost control of this move whatsoever. One massive move to the upside, looking very strong on TSM, and not even weekly overbought conditions just yet. Although we do have a slight little bit of daily overbought conditions on that chart. TSM, in terms of a long-term fundamental play, you know what's funny is even at 220 right now, the stock is arguably still one of the cheapest semiconductors in the market. Forward price to earnings is only a 23. Forward PEG ratio is a 1.37, and although the free cash yield is a bit low, just don't forget how much net margins they have and how much demand they have for the next 2 years as well. That's everything for your overall market rundown. Hopefully you enjoyed that. Now let's spend the next 5-6 minutes going through the biggest gainers and losers of the day, shall we? And you know what's funny is I'm making an effort to make these videos shorter, but I've now added, since I'm making the video shorter in terms of the market rundown, the earnings, etc., well, now I'm spending the extra time on things that you guys wanted, right? Such as going over more stocks than I usually cover in our normal rundown. So I'll try to get through as many of these as possible. FICO, in my opinion, guys, it's due for another swing trade here. 1764 down to 1652 is the support range. I would like to play this one if you get a back test in this range right here. The bulls are currently looking to reset the weekly timeframes, and I would want to give them a chance. FICO is still one of my favorite companies in the entire market for fundamentals. Of course, it's not cheap, but that's because they have a very large competitive advantage right now. I would not mind playing it. Etsy, unfortunately, I cannot say the same. Consumer discretionary has been hit quite hard. If I'm going to go for an online marketplace overall, I know it's not the same thing because, you know, I know it's what the company I'm about to tell you is not the same thing. But if I'm going to take one of these two companies, although they don't do the exact same thing, I'm going to take Shopify, just between you and I, right? If I'm going for e-commerce anything, I'll probably go for Shopify. Much better numbers, much better growth prospects, and Shopify is still off its all-time highs by a lot and a lot better price action structure. So Etsy is not for me, but I understand you guys. If you do want to go for a bit of a swing trade here, we're looking for the weekly uptrend continuation here into the maybe 60 to 80 target. I don't know if the market's going to carry this one up, but still, all things considered, not too bad. BYD. Now, BYD is a company that I recently added to my long-term portfolio. I have not talked about it a lot, but I did add in these two downtrending cycles right here, both in March, both in April. I actually sold half of my Tesla shares to buy positions in BYD, and another company that I rarely talk about on the channel, which is ISRG. In my opinion, one of my favorite medical stocks in the entire healthcare sector overall. I don't buy health insurance companies for my long term. I don't buy pharmaceutical companies. I don't have an edge in either one. But when you're talking about a high moat, high competitive advantage technology company, medical devices to be specific, that is when I get possibly interested. So I sold half my Tesla position. I mean, I bought Tesla, guys, way back in the day, right? I bought Tesla back in like 2018, 2019. So don't worry about me. I made a ton of money on the stock, but my remaining position back here in February and March, I sold half of it to position into some stocks that I was interested in, BYD and ISRG to be specific. I'm still a very big fan, guys. BYD does a lot of things that not many people think about. Not only are they an official OEM manufacturer for the iPad, yeah, I know. They have one of the biggest battery businesses on the planet, and also their EV ramp across the entire world is now outpacing Tesla in several end markets. In terms of EVs, they've really come a long way in the past 7-8 years. And I'll remind you, Warren Buffett actually has had a position in this company since the early 2012, 2013, 2014 period. He's absolutely crushed that investment. And I figured I should participate for the next ramp up of the business overall. Trade Desk is a buy for me, but a buy in the lower 60s. I'm not opposed to playing some short puts. I was exploring those with my members earlier this morning. We went through their earnings not a long time ago. They've successfully done their platform shift over to the new Kokai integration, which is the reason that they dropped all of this, because it was just an absolute nightmare. That now that it's completed, now that they're seeing a very nice revenue and margin expansion from that platform migration, I'm a big fan of playing Trade Desk, even though it does have some competition. Just looking for a weekly higher low into support, and this end of support stays at about 61. So I don't mind playing some short puts under the market. Talking about Chipotle becomes a short put play for me down here in the lower 50s to high 40s. Not too bad. Weekly uptrend is maintained. Any back test might just be looking for more momentum accumulation before possibly sending us a little bit higher. We went through their earnings as well. The company's not very cheap, but I would not mind playing it there. It seems to be an area that the bulls have defended well. So not a long-term portfolio position for me, but I do tend to play it with the wheel strategy a few times. ASML, I've been talking about it all week. I think this one is the next runner up. So although the price action could be somewhat choppy in the next few days, weeks, etc., I'm a big fan of buying ASML. 800 down to 700 bucks for some long-term shares or some longer-term, long-term portfolio shares or longer duration swing shares. 6, 12, 18 months just to go for a catch-up play with the rest of the industry is a fairly decent proposition. And to the upside here, what plays we're running the most? Enphase. Enphase I'm still not touching. This one has been on the channel now twice this week because of the sheer size of its moves, of course. Not that interested in Enphase, unfortunately. High rates, high financing rates, right? And them shifting a lot of their production out of China to other end markets. just to save on the tariffs, etc. Their quarterly earnings were not very good, guys. I mean, I might revisit this one in the future, but it's just not for me right now. I mean, I'll try to do more of a deep dive analysis. I don't have that much time today to do it, but suffice to say, guys, I mean, you can just take a look at their fundamentals, right? Dwindling margins and everything other, the sun for this company. No pun intended, because it's a solar company. Anyways, EPS slightly shifting to the upside, but will take a couple quarters to do that. Revenue slightly shifting, but a far cry from what it was back in 22 and 2023. HIMS recovering. I was very vocal on this stock. Any dips on HIMS down here with some good volatility, I would be playing the wheel strategy under 40 bucks. That is still exactly what I did. It's very tough for swing trade longs from here because we don't have any levels to really base our trades off of, but not looking too bad. If you're looking for some swing trade longs, the stop, even though it's kind of a falling knife and hasn't really evened out just yet, the bears have a chance to send this one a little bit lower into the actual level of support and the 200 EMA, which sits at about 37. But if we're trying to take some swing longs here back into this area and back into the highs, the stop loss would have to go below there because that invalidates the whole trade, and you might just end up lower thereafter, right? Rocket Lab, I mean, like a rocket ship today, right? Beautiful new breakout here. To Rocket Lab's new all-time highs. Very tough for me to chase the stock up here, but congratulations to anybody involved. If I would like to get involved into Rocket Lab, you may just be waiting, well, not you, but maybe me. I might just be re-waiting for a back test of the support range 30 down to 27. Some of you ultra bulls on Rocket Lab will say that's never going to happen, but anything is possible in the markets. I won't chase it up here. If I want to participate, I got to wait patiently for my own technical setups. A-Lab, we've covered a bunch of times this week as well, looking for a breakout of the highs. Overall, if we're looking for the breakout trade, you just got to play the swing trading range for what it is. If you're looking for the breakout and the attack of the next weekly level, which would be all the way, possibly, well, this guy would be number one at 110 and then all the way to the all-time highs. There's a very clear stop loss here, right? This is a very nice push on the weekly accumulation range for like a month and a half. If you're looking for the breakout, the stop has to go there. Why? Because if you lose this, it invalidates the entire setup and you're probably coming down a little bit lower, right? So A-Lab not looking too bad, even though we are a little bit late on this one. It's a $10 stop loss right now, roughly. And the upside first target, at least, would be the gap fill right here, 114. So it's not the best risk to reward to take profit number one, but it's not a bad trade in my opinion. Circle coming down off of its low, coming back up from its lows rather. Not too bad, but still, Circle is going to be very volatile. The way that I like playing this one, guys, is with short puts. You can find some ridiculous strikes. I played it twice this week. Once here, once there. Can you imagine how much of a distance I was getting on my strikes for the wheel? That's the way in which I prefer to trade Circle right now, as the price action will be very choppy overall, all things considered. Some of the ones we haven't covered recently, SMCI, I believe, was on the channel yesterday as well, looking for the breakout, right? Clean attempt for a breakout. Stop loss on any trades. If you were in this one after yesterday's analysis where I was saying, yeah, there is a breakout trade here and the take profit range is in the mid 60s. Stop loss goes below the lows at 38 essentially. So it's still a fairly attractive risk to reward ratio. You're risking about 10 and you're trying to make about 20. So it is roughly a 2-to-1, or at least it was yesterday. Coinbase still continues on the highs. Coinbase, if you want me to participate, you need to cool off the daily uptrend right here and give me a back test at least of possibly some of these ranges. Some of you guys say it might never happen, but then again, guys, as I said, if it doesn't come and pick me up, I don't care. There's so many other stocks for me to trade right now. I'm not going to get, caught up just trying to chase just one of them, right? So first Circle, Coinbase for me would need a back test here of the lower 320 to 310 range if I needed to be interested in playing this one. And ANET going again for the breakout right now. Beautiful range of accumulation. We were very vocal on this one. It was in the bonus plays of the top 5 options videos, right? Looking for short puts under the market. Any back test currently could also be the same thing. Looking for short puts into support. 90 down to about $82. ANET, a fantastic company overall. I wish I could say more, but we're trying to do this on limited time and looking for the weekly trend breakout as well. So if you're holding any shares, I don't see many reasons to sell right now. And the last one I'll include in this analysis for today is Spotify. Spotify looking gorgeous for the expansion right now. You may remember I played this one into earnings and had a very nice rally into some take profit areas up there, but I didn't catch all the rest of the move. It was just a short-term play for me. That being said, Spotify is looking very good. It's tough to buy Spotify up here, guys, right? I don't mind buying at all-time highs if the company is still fairly valued. But right now at 775, which is a whole roughly 20% higher than when we did the analysis, Now it's getting a little bit hot, right? The PEG ratio is going to be right 1.6, 1.7 maybe. The forward price to earnings is going to be expenses as well. If you go all the way out and project with 2028 sales, as I said during the earnings call, it's not that bad, right? But still, right? You really got to focus on this price to sales metric right there. And the free cash yield is a little bit low. So it is expensive right now. It's a very solid company, but there's always 3 ratings you can give a stock. Buy, sell, or hold. I wouldn't be selling any Spotify because they're going to have fantastic years in the future, but I wouldn't be buying. This one is just a hold for me at the current time, and no clear indication of swing trade levels as it's really breaking out to blue sky territory. And with that wraps up the entire video. Hopefully you guys enjoyed. If you did, consider dropping a like. Would appreciate it for the growth of the channel. Consider subscribing to the channel if you're new as well. We do these every Monday to Friday after the close. And last but not least, if you have any questions, also free to ask them down below. I would be very happy to answer any of your questions. If you need some help on the technicals, on the macro, on anything you guys want, let me know down below in the video comments. And in the event that you guys were looking to join a community of traders and investors such as yourself, where we trade very consistently every day, but also invest and build very solid long-term portfolios for our future, you may consider joining our trading and investing community with almost 200 other members. In the community, you get access to all of my trades in real time, whether they are the wheel trades, the directional trades that I talk about, call debit spreads, leap call contracts, swing trades with shares, and everything under the sun. Here's just a lot of the swing trades and wheel trades that we've been making over the past couple of months. You can clearly see the green check marks are the wins and the red little circles are the losses. So all things considered, fairly consistent, but of course I can't guarantee anything whatsoever, as all these trades are, of course, just for educational purposes, right? That being said, you also get access to our private morning live streams from Monday to Friday. I do it for about 2.5 hours after the open, where I trade live and take all your questions on your stocks, your options, your long-term portfolios. If you can't be there, they're recorded. You can also ask me all your questions in our chat rooms throughout the day on anything that you want, and I'll be very fast to answer in there as well. You also get access to our private videos where I go through in-depth technical analysis rules, fundamental analysis rules, how to grow portfolios, small, medium, large, different trading strategies as well, whether it's some strategies that I don't talk so much on YouTube, right? Call debit spreads, credit spreads, leap contracts, how do I price everything out, etc. Our members have been finding tremendous value. The whole education section that I don't do so much of on YouTube. And you also get access to all my charts as an extra bonus. You get to copy paste all my watch lists. It takes 10 seconds. Copy paste all my watch lists and also all my charts. Whenever you see support resistance ranges or any technical analysis on a chart, and whenever you see the fundamental analysis, which I have on over almost 200 companies, which I redo every quarter, you get to copy paste all that. It takes 10 seconds. They become yours. And thereafter, it just makes it a lot smoother for you to follow along with what I'm doing too. So that being said, that's everything that's offered. Well, a lot more stuff, but that's the things that I can go over right now in the community. If you're interested, the link is always down below in the video description. And don't take it from me, just take it from the reviews that we've received since the service has been public over the last 9 months. If you want to see what other people are saying about the service, feel free to check out the reviews as well. That being said, that's everything for me, guys. Hope you have a very beautiful evening. I'll see you tomorrow. Wrap up the week strong for the Friday close, guys, and then enjoy your weekend. I'll see you tomorrow after the close. Take care. That's it. Peace.